screens looking spectacular. I think one for the records, really. And, you're seeing that big push there. The question is, how do you move ahead from here? The internal debate has been that, okay, you will see some profit booking. At what point do you see it, and what do you do at this level?
Thanks for having me on the show. The question that you asked me is something that, that was true for last week, a year back, 2014. Maybe even 2004, right? So even when you had a complete change in the government and the markets kept down 20%, that was a time to go and buy, and you had one of the biggest bull markets. So to me, the only alternative is that if you are not in the Indian equity asset class, what are the alternatives? And I believe that you don't have a great alternative anywhere in the world. I've been saying this for some time. You've got the right stacks set up for India to end up being a bubble market in the next 4 years.
No, so Nirav, just to that, I take your point. Thoda evergreen type question tha mera. Give me a chance to revise it. Yes, that question has been always there in the Indian markets. What you do at 2004, also that question was there. Last week also the question was there. Specifically, let me come to specific spaces. If I were to look at the PSU stocks, defense stocks, and the valuations they have run up at, an investor who is looking at their portfolio this morning and feeling very happy also has that question, ki aaj main kya karu? After this kind of run up, can you sustain above 23,000? We know now, as in the market has completely priced in what we are likely to see on June 4th as well.
Right. So I'm not even looking at what's going to happen tomorrow. Maybe the numbers are in line with what the exit polls are predicting. Maybe they could be higher or lower. Frankly, anything once you got a full majority, I think I'm agnostic in terms of how the current political dispensation is going to look at policy reforms going forward. To me, the key point is that you started on 6% growth rate, you have hit an 8% growth rate. Your core inflation today is lower than what is there in the US. I don't think that we are getting a sense of where we are heading as a country, right? We had a big problem with current account deficit. You are at a stage where in next 1 or 2 years, you will sort of get into a current account neutrality situation, right? So you need to look at equity market in context of where my macroeconomic variables are moving, right? So I suspect that you are not going to get reasonably good returns in the equity market, but even in the bond markets, because your interest rates are going to head down over a period of time. And that finally determines the valuation. Now, coming back to, obviously there are pockets of expensive valuations like defense and maybe some other stocks. So what do? If you think that the story is great, if you think the valuations are great, then you try and play with the size of the bet, right? So I can be neutralish or I can be underweight, but you still need to be a part of that. You need to be invested in these stocks because which is where there is longevity of the growth. Let me give an example. Let's try and put this in context of why this is happening, right? From 2010 to almost about 2020, you had markets rewarding a particular set of investments, which was largely consumer-driven, high ROC, consumer stocks, stuff like that. And when the market incentivizes that, you got investments that will follow that. So you got Jindal's setting up a paint plant, you got Birla's setting up a paint plant. Who set up infrastructure in the country, right? Everywhere in the world, we are short power today. Someone has to set up utilities. And therefore, what you are seeing right now in terms of utilities is that the market has to have an adequate incentive structure for promoters to go and say that I am going to invest in these new sets. That is what is happening. So this is capitalism. I am not at all surprised.
Ravi, hi. It's also Samina joining in. Big global brokerages from the Jefferies to the Cantor Fitzgerald have recently touted Adani Group stocks as a proxy to play the India growth story. And the sharp rally on some of the stocks is a reflection of that. Do you feel that there is still significant investor wealth to be created amongst these stocks, especially in the backdrop that fundamentals of these companies have also improved significantly?
No, so clearly if the exit polls are right and if this government is coming back, I think a lot of the performing sectors will perform even more, and that includes infrastructure, defense, railway, all those kind of stocks are going to continue to perform. Having said that, the margin of safety over there has definitely reduced dramatically, but I don't see a reason for those stocks to come down in any near-term thing, and I think the growth will get stronger. I do expect some kind of a change in the way the market is performing at some point of time, because I think the central government is probably going to slow down on its own capex, and private sector and state governments are expected to pick up the gauntlet over there. So the type of companies that do well might change. It will not be based on what the central government is doing, but more on the private capex cycle.
I'd like your thoughts on this one too, because you can't help but see the kind of rally some of these counters have seen. Fundamentals have improved.
Samina, I think there's a small audio thing, maybe your mic has fallen, but Nirav, the same question to you really, and you were just starting to answer that. Could you give your thoughts?
Yeah, so my view is that, the execution that you've seen in Adani Group has been mind-boggling. I mean, I'm surprised, and I don't think that, given the fact that there are always valuation concerns around some of the stocks, I don't think investors have looked at it very deeply. And please don't get me wrong, I'm not even advocating, we've not covered, we don't have the stocks under coverage. But if you look at what they have done, for example, in the renewables, right? They've got close to about 2 lakh acres of the most appropriate land bank for solar. They are backward integrated in not only in cells and modules, but they have also started, it's already commercially operating. We are talking about Ignore. They want to get into polysilicon. I don't know how many guys are aware that they already set up a 1 lakh ton of copper refinery, right? And just look at the scale and scope of the work that is happening in the airports. Their execution is at a different level altogether, right? So there is a lot of optionalities in that group. And I think that only one group which really invested in India's infrastructure in the last 5 years has been Adani Group. And the world opens up, because that is where the entire thrust is going to be. Where is the capacity to do large-scale construction? I'm just giving an example. We've seen the PM going on record saying that you want to pitch very, very strongly for Olympics in 2034. Now that is going to be massive investments, right? As a country, do we have the capacity, right? So there are some groups who have invested in setting up their capacities and at a world-class level. So I'm keeping the valuation aside. I'm just talking about the fact that some groups took a different route in terms of where you want to invest for the next 20-25 years. A lot of the groups went after the consumer-facing businesses. What is going to play out over the next 10 years is going to be entirely different.
Okay. Ravi, understand we have to let you go, but one final question really. Where is it that you now put incremental money at work? Is it, would you bet at some point of time consumption will make a comeback? Would you bet on policy push continuation, and therefore some of the beneficiaries which have gained quite a bit but are expensive might still become better? How do you now allocate incremental capital, Ravi?
No, so my incremental money obviously will try and look for areas that have not performed, and especially I think large private banks or consumption-related areas. These are the ones. Having said that, in the next few months, can the momentum continue in the stocks that are doing well? Absolutely, they can. But if my prism is 3 to 5 years, and from that 3 to 5 years prism, I find investing in some of the performing companies a little bit of risky. Am I still holding on to those companies? Yes, I am, but I am not putting any more incremental money on them.
Okay, Ravi. Understand we have to let you go. We'll let you go on that note. Thank you so much for taking the time out and being with us today. Really appreciate your time.
I have one question with Nirav. Nirav, I was listening to what you were saying about how private sector now comes to the forefront, and really the trick over the next few sessions, and I would say not just next few sessions, next few weeks in this market, is going to be to identify the new pocket of growth. If you're looking at a situation where you have policy continuity, the same kind of push to the private sector, etc., Where is that growth? Where do you see the clues there? So, for example, we were having a conversation this morning that climate change and tackling climate change will become a huge theme for any government, including Indian government, in the next 5 years. You're going to push down on Make in India, PLI, and the participation of the private sector. Do you think it's very important now to identify those new pockets, and what have you been seeing? Nirav, can you hear me?
Yeah, I can hear you right now. I missed the last part of the question.
Yeah, so the last part of the question was essentially that what are those themes in your view? Where are those stocks? What are those themes? Because right now someone has to spot the new ideas. The PSEs, defense, rail are already there, priced in. If private sector is going to take the forefront, then where are those new ideas coming from? Nirav?
Right, the markets, right? But I've seen a major reform.
Can you start that? Yeah, you kind of froze there for a second. Can you start that again, please?
Not.
All right, we have a bit of a glitchy line over there, but I'm really interested in seeing that story, because that's how you will need to spot the winner, right? Because the themes that have been going on for the last, I would say, year and a half are there very much. They will continue. Public sector companies will become stronger, their balance sheets healthier, your infra, policy push, road, railways, defense, etc. But what's next? What's new? If they have said time and again that AI, EVs, climate change, all of these areas are going to become big themes, becoming Atmanirbhar in semiconductors, APIs. What are the stocks that you then now look at as the next run?
I mean, even if you don't go that far, consumption, rural consumption, that could be one space that may start seeing some traction. Of course, those numbers haven't looked very promising in terms of GDP data. But if you see the government doing a little bit of a push to spruce up consumption, then I think rural could be one more theme that the markets may start constructively looking at. But all in all, what's interesting, and I think this is what we talked about, guys, the Nifty saw a start at 23,340. We're 200 points off the day's high point. So profit taking has kicked in as expected. Trade will stabilize through about from now till about 11:30, 12, and you may see a return of euphoria in the second half of the session. But there is a little bit of sanity that's now returning. The euphoria is settling down. PSU banks are the star trade. So is real estate. So is defense. Everything is moving up. But I think the markets may now give traders an opportunity to come back in and buy for the second half of trade, and maybe potentially even tomorrow. So watch out for stocks. There are lots of stocks that are off the day's high points. If you're a short-term trader,
on what you call sanity. We're still 600 points up. So
we are, and I mean, stocks like Adani Enterprise are at the record high. So if you didn't enter these counters at the get-go, but beyond Adani Group stocks are a whole host of other names. The Nifty itself was at 23,340. That was an intraday high. We're slightly lower now, so we've gone up about 150, 180 points from there. Actually, do we have any of our technical guests with us?
No, but we have Nirav Seth, so I think we should ask him.
What do you think? I know this market should and is best divided between a tactical trader and an investor. We know what investors should be doing, right? Staggered investments, be disciplined. That's when you create significant wealth. I don't know whether you're comfortable answering this for me, but we did get a gap up, a massive gap up in the first few minutes. We made that high of 23,340. We're 200 points off that now. Do you feel that now could once again be an opportunity for bulls to maybe initiate fresh longs, maybe covered option strategies between now and today? Or do you feel like it's buy the euphoria, buy the exit poll and sell the news, and the markets may go back to business tomorrow?
So, it's usually difficult to take short-term calls, but I am of the view that the markets are gradually going to rise pre-budget, anticipating what the government is going to do. They'll probably stall over there. I'm then probably looking at a longish spell of time correction more than anything else, till the time that market is ready to try and price in a rate cut. And then, when you start looking at you get more clarity about FY26 earnings and FY27 earnings. So budget, I think, will be crucial in terms of the government trying to lay the direction for the next 5 years and 10 years. And I suspect that you are likely to have the next level of reforms on the indirect taxes, right? And without trying to get away from the fiscal consolidation that are going to move forward. And that could be a big trigger in terms of how the markets are going to look at.
Nirav, I think we had a patchy line and I don't know if you could hear my question. Let me come back to it. I was talking to you about what new themes that we can spot of what is expected in term 3. I mean, what is already run up, what is already clear in terms of policy push is there. So your rail, defense, improving balance sheets of PSUs, etc. That theme is there. What are the new areas that you are looking at right now?
So I think if you just read what Mr. PM Modi has written in one of the editorials today, size, scale, scope, and standards, right? So what you want to do it at a much bigger scale. I think that we've lagged in terms of electrification, and India spends about $100 billion in oil imports. You need to get that supply chain right. So I think that'll be a massive focus in terms of how do you want to set up that ecosystem for electrification in the country. You mentioned about climate change. I call it energy transition. Serious work has to happen in the green hydrogen and then all the way into solar and wind turbine manufacturing, right up to the mining stage. And like I just referred to, I think the critical thing is that you also want to uplift the entire manufacturing in the country. And one way to
Nirav, on a portfolio recommendation level at this stage, where we've seen whether
that is to try and reduce the media GST neutral rate. I don't know whether I'm being audible or whether we are.
we can hear you, Nirav.
Sure.
Nirav, go on. Please go on.
Yeah. So I was just saying that to me, a critical reform could be whether you can reduce the revenue neutral rate for GST, which is let's say about 16% to about 12%. That is disinflationary. That does exactly the same thing that happened to our direct tax.